This is Tom Asper with the Viper Report. A pre-market opening comment on June 2nd. After yesterday's explosive move to the upside, this 5-day chart of the S&P 500 shows you we came into a low of 41.76 on Thursday and then hit a high of over 42.31. Pretty impressive. 80 numbers were positive, but they were better earlier. Still 2.5 to 1 positive. Still a problem is only 27 new highs and 76 new lows. Similar negative numbers for the Nasdaq Composite. The weakness in the advanced decline analysis has kept us pretty cautious for most of May. And even though the chart looks pretty good, we had a breakout here above this, 417 level in the S&PY. Pulled back here to the 20-day EMA during this week and then surged to a new closing high here. 425.71 is the R1 for June. 433 is the R2. It's positive here that the 20-day moving average here is 415.44 with the 50-day here in pink at 410.45. These are sloping upward, which is a positive sign. In fact, even a simple tool like this, as I'll discuss next week, can keep you out of trades that probably won't materialize for you. However, looking at the AD numbers, we still have this problem. You can see the S&P AD line. It's been diverging here while the S&P has been moving higher. Okay, we turned up yesterday, but still well below the moving average and the downtrend here. Both of those need to be overcome to signal a trending move, like we had, in off the March lows or, at the start of the year. Stocks only, similar pattern here, a series of lower highs, lower lows. It's not bullish. Or with the NYSE All AD line, it came it's the closest to moving back above its moving average. Of course, you're looking at the market leading QQQ. We sold half our position here on Monday's open. We thought it was a little frothy. We were above the Stark bands here, but we're back up here and looks like we could surge up to the 360 area. With short-term support now just at the recent lows, at 346.50. But we took a nice profit here and don't have no regrets. We'll look for a re-entry point, but their market is still extended on the upside. Also, you can see the Nasdaq 100 AD line here, still below the highs we made in early February. It's had a couple of secondary peaks back above its moving average. So you really need to close above this level to resolve the negative divergences. RS analysis still signals that the Qs are a powerful market leader. Pretty interesting action in the bond market for the past couple of months. We talked about March and April signs that rates were bottoming out here, and we were looking for a move above this 3.65 yield on the 10-year note. We got that, but really the rally from that lasted about 6 days. We spiked above the R2 in May and then quickly reversed, and so we're now back to the new pivot. So that's not that suggests that maybe just be a bounce in yields and that the overall downtrend is ready to resume. That could have important implications for the markets, and though I don't know of many bond traders that look at the pivots, they should. This is pretty valuable too. You can see as the bottoming process here in April, we just got right up to the pivot and failed. So MACDs are still positive, testing this downtrend here, so no real divergences here. So the action going into the next week will be important. Either we're going to resume the uptrend and go up to that 3.854% area, or we could have a failing bounce up to here and then a push lower, so a drop below the lows on Thursday at 0.3570 yield will be important. The growth value ratio we talk about quite frequently, IWF, IWD, gave some really good clues at the start of the year that growth was a place to be it still looks very strong. It's overcome this peak right here. If we close up in here and, up to resistance here, so a bit above its moving average, so we could see another pullback here. Let's look at the daily chart. It still looks positive as well, as the prior high in the MACDs have been hit. No divergences here, and it moves sharply higher. So I continue to look at the possibility that we'll see a pullback in growth and a rebound in value during the summer. No signs yet. One of our best trades on the growth side has been in the SMH. We saw signs of a bottom here in early May, and heading into Monday's open, we recommended selling half the position here. You can see we've been above the Stark bands for 2 prior days. We pulled back here. If that could be all the setback we'll get, but that's fine. If instead we get a more complex pullback towards that 138 to 140 area, we'll look to add back in that 50% position. The 260 analysis of the S&P futures flipped back to positive yesterday, and are still positive. You can see our next target is 42.57. Went short earlier in the week on that decline, and took some profits there. I will be updating this analysis on Wednesday, June 7th at 10 a.m. Eastern, 7 a.m. Pacific. And if you'd like to sign up, you can go to the Viper Report, click on this Live Trader Showcase, and you'll get all the details. Also, you'll be eligible to receive a download of the session, and the topic is 4 key steps before you trade. As always, if you have questions or commentary, you can email me at tom@viperreport.com.